Hello, welcome to class, and we'll be talking about tax audit, investigation, and enforcement. And under this, we will look at the purpose and scope of tax audit and investigation. We look at the types of tax audit, the procedures, documentation and evidence gathering, tax offenses, penalties, and disputes resolution mechanism, and we will also look at the ethical issues in tax investigation and enforcement. And the core challenge here is information asymmetry, and where taxpayers know their financial details, authorities must verify, and the purpose of audit and enforcement is actually one, for revenue protection, two, for verification purpose, to ensure self-service accuracy, for deterrence, and that is to encourage voluntary compliance through the threat of detection, and for education and asymmetry improvement, that is to identify common errors and areas for legal or policy clarification. And the balance is effective enforcement must protect revenue while respecting taxpayers' rights and maintaining public trust. What are the key distinctions between audit and investigation? When we talk about tax audit, it's actually civil examination. The purpose of tax audit is to verify tax liability and to ensure correct payments are made. And it focuses on revenue collection, and the standard is actually civil standard of evidence, that is balance of probabilities, and the process include emphasis on cooperation, representation, and administrative appeal. However, for criminal investigation, it's actually, the purpose is to gather evidence for potential prosecution of tax crime, and the focus is on punishment and deterrence of deliberate evasion. The standard is criminal standard, and the process is an enhanced right for taxpayers and can involve search warrant interviews under caution. The types of tax audits include the DEX audit, field audit, special audit. And when we talk about DEX audit, it's actually, the way of it is the Revenue Authority Office. And how is this carried out? It is carried out as a review of returns and requested document via correspondence, and it is best for specific issues, simple returns, and efficient. It is actually, however, efficient but limited. It is efficient, however, it is limited. And for field audit, the way of it is the taxpayers' premises. Is the taxpayers' premises, and the how is a comprehensive examination of records, operations, and interview, and it is best for complex businesses, high-risk taxpayers, and it's actually a resource intensive, but it's actually thorough. It's very thorough, and for special audit, it's deals with fraud investigation. It's we have a number of special audits, including fraud investigation, industry audit, transfer pricing audit, and random audit. For fraud investigation, it is used for suspected deliberate evasion. And for industry audit, it is targets specific sectors like constructions, cash-based businesses, and the likes. For transfer pricing audit, it examines related party transaction for arm's length compliance. And lastly, the random audit is for compliance measurement and validating risk methods or model. When records are lacking, we talk about the indirect method. Talking about the indirect method, and it is used for direct verification. It is used when direct verification is impossible. It is used when direct verification is impossible, that is inadequate records, cash businesses, suspected frauds. And common methods under this is the net worth method, which analyzes changes in personal net worth to estimate income. Another is the bank deposit method, and this is it treats bank deposit as presumptive income. Another is the source and application of fund, and this tracks where money came from and how it was spent. And lastly is the markup or unit volume method, which estimates sales based on cost or industry average. And the key point is that it is inherently imprecise, and taxpayers have the right to challenge assumptions and provide alternative evidence in such case. And we have the process of audit, And the first step is planning and notification. Under this, it encapsulates risk assessment, scope definition, formal notice to taxpayers. The next is opening conference, and this is an establishment of scope, timeline, and communication protocol. And the next step is examination. And under this, we talk about document review and analysis, interview with personnel, and testing and verification procedures. The next step is the evidence and documentation stage, where meticulous working paper are crucial for quality and defensibility. And another is the closing conference and report. And under this, its findings and proposed adjustments are presented. Under this, findings and proposed adjustments are presented. And the last one is assessment and resolution. And it's actually an agreed adjustment leading to payment, and disputed ones move to appeal. Consequences of non-compliance. This include penalties, which is failure to file it, result in percentage-based penalty accruing over time. For accuracy-related penalties like negligence or substantial understatement, approximately 20% of underpaid tax is made, and for gross valuation misstatement, about 40% of underpaid tax. And for civil fraud penalty, 75 to 100% of the fraudulent underpayment, and criminal penalties like fines and imprisonment for willful evasion. How do we deal with penalty mitigation? How can penalties be mitigated? The first one is reasonable cost, that is penalty waived if taxpayers showed good faith efforts was thwarted by circumstances before their control, like natural disaster and beyond their control, like natural disaster, reliance on professional advice, and the likes. Another is voluntary disclosure, which it deals with coming forward before being contacted by authorities, can lead to penalty waiver and avoidance of criminal prosecution. And lastly is first-time abatement, and this deals with administrative relief for otherwise complaints taxpayers with a first-time procedural failure. Resolving these disputes. How to resolve these disputes? The first one is internal administrative review. That is first line of appeal within the tax authority. Should be independent from auditors. And another is the alternative dispute resolution, using alternative dispute resolution in terms of mediation, And in terms of arbitration, the arbitration is a neutral arbitrator makes a binding decision in this situation. And another is the judicial review, where we talk about final recourse through the courts system. We have the ethical issues in enforcement, which for the revenue officer include impartiality and fairness, and there should not be bias, and there is need to apply the law consistently. Another is integrity and honesty for the revenue officer. Another is confidentiality, where he's able to protect taxpayers' information, and another one is prevention of abuse of power. And for the tax advisors, the ethical issue in enforcement include competence and due diligence, client advocacy versus system integrity, where advocate vigorously within the bound of the law and do not assist in fraud. And the last one is conflict of interest. You must be able to identify and manage them transparently. In conclusion, tax enforcement is a critical pillar of a functioning tax system, ensuring fairness and revenue adequacy. And understanding the different types of audit, investigative procedure, and penalty structure is essential for both advisor and taxpayers. And procedures matters. And another thing is strategy is key. That is, knowing the dispute resolution mechanism and penalty relief option is crucial for effectively managing an audit. And lastly, ethics are fundamental. That is, professional integrity is paramount for all parties involved in the tax compliance.